Hi, Kevin. You've just published an excellent deep dive into Ford, titled In Search of the New Big Profit Driver. Ford and other OEMs are seeking to dictate the pace of the EV transition to protect their profitability. Why is Ford Blue Cruise so critical as a profit bridge?
Yeah, so what's going on now, and if you just rewind a little bit, about 10 years, the domestic manufacturers, Ford specifically, have been very successful in driving profitability by shifting to light vehicles, and especially in the US, pickups, SUVs, and away from smaller cars, coupes, and sedans. And the issue is that's 10 years in the process, and it's very late stage. So basically, all of Ford's profitability comes from the US, and it comes from truck. About 99% of its revenue is truck based. There's really nowhere left to go. Not a big deal, right? Because the idea was, okay, now as we transition into electrification, we're going to drive revenue and profitability with these new products. The problem is, sort of like on day one of that mix shift to truck from car, which started in 2013, it was profitable on day one. The issue with electric vehicles for companies like Ford is it's not profitable right now. So managing that transition to say, okay, we're going to go from very profitable trucks to not profitable EVs has been very messy. Now, things like Blue Cruise and software-based content for manufacturers, and that can be in the areas of advanced driver assist systems, it can be connectivity, it can be efficiency. All those things are profitable on day one. And that's really where the automakers, until electrification gets sorted out in terms of the profit dynamic, where we think the automakers will lean and say, we can do this now profitably by adding this content to the vehicles that we're already building. And I think that's why we're saying it's the profit bridge between now and electrification.
Picking up on one of your themes there, the Model E business at Ford, I understand, is set to lose some $4.5 billion this year. How quickly can they bring that under control?
Yeah, that's the big question, right? Because it was originally forecasted to be a $3 billion loss, and now it's 4.5. But as you've seen for all other automakers involved in electrification, especially the pure plays, prices are coming down. So for Ford Model E business unit, if you look at a product like the Mustang Mach-E, where that probably needs about a $60,000 transaction price, and I mean that at retail, not necessarily at wholesale to Ford, but those need to be selling at about $60,000 to be profitable or even break even. They're selling at 56 now, right? So the issue is, if you're trying to transition, you're selling unprofitable vehicles, how aggressive do you want to be in that build out or in that sales process? So there's a little bit of economies of scale that are out there for them. The problem is, the more you sell, the less profitable you are right now. And that's why I call this transition very messy, and in fact, looking for something else to bridge the gap there. They talk about the end of next year, Model E, or 2025 getting there and being profitable. But like I said, as we've seen prices falling in response to demand, that could get pushed out, a year beyond that.
And then, I have to ask why I've got you with the UAW on strike. Obviously, executives have a lot on their table at the moment. What do both sides need out of the negotiations?
Yeah, I look at three things, right, in terms of demand. When the UAW is looking for wage increase, hourly wage increase, very easy for them to point to profitability over the life of the last contract, or even going back those 10 years like I talked about. Very easy for the union to walk to the table and sit down and say, we can see how profitable you've been. We want our share of that. And there's really not a whole lot the automaker can do about that. Now, on the other hand, from the automaker's perspective, they can say, yes, we've been very profitable, but if you notice, we've been very profitable by selling fewer vehicles and moving to truck from car. So we've been trading unprofitable, low revenue and profit contributing vehicles to very profitable vehicles. But our output is down, our volume is down. So I think the manufacturers want to say, we'll give you your money, but we have to have the flexibility going forward to understand that this is going to be, especially in the US, a smaller market. Revenue per unit, average transaction prices might be up, but we can't be married to headcount and capacity and promise that that's going to stay the same or increase. We think it's actually going to decrease, and the manufacturers need the flexibility to be able to adjust capacity and headcount going forward. The third point is this: is the union talks about, going back to the old pension and healthcare benefits, and it's very easy for the manufacturers to point to bankruptcy and say the last time we had that kind of model, this is where we ended up, except for Ford, which just barely missed, but Chrysler and General Motors in that structure ended up in bankruptcy.
Thank you very much, Kevin.